Hello, this is John Bonnick, the Director of the Kingdom Business Association. I want to introduce Wanda Strickfaden and the webinar which is called Unlocking the Secrets of Credit Scoring. Wanda Strickfaden, who is our guest tonight, was a mortgage banker, and she saw so many people didn't understand their own credit ratings. Many of them couldn't get loans and didn't know how to even work with credit scoring. What she discovered as she researched will be something that will help you. Can you qualify for a mortgage? Should you have another credit card? What happens if you cancel a credit card? How many points is subtracted from your credit score? All of these questions and many more, Wanda is going to answer. This will help you better learn the system. Don't let the credit system run you. You are going to have inside secrets of how credit scoring works, and it will help you as a kingdom business person be in charge of the system rather than the system being in charge of you. As the webinar begins, Wanda was speaking about the annual credit report, the annualcreditreport.com website where you can actually get your credit reports online. So you'll hear her start with her saying, go to www.annualcreditreport.com, and that is a place that you can find and ask for your own credit report. Then she goes into the entire webinar. I know you're going to enjoy it. Thanks for being with us.
It's called www.annualcreditreport.com. That site will allow you to pull all three of your credit reports with each bureau. Your scores will not be included. Be aware that you do have the right to pull your credit report with all three bureaus for free without your credit score. If you include your credit score, be aware that each bureau will charge you a very small fee for that credit score. But you do have the right legally to pull your credit report with each bureau for free. Now that's the first step. You're definitely going to want to look over your credit report with each consumer reporting agency. There's a total of 3 reporting agencies. There's Experian, Equifax, and TransUnion. Those are the 3 reporting agencies. So keep that in mind when you're pulling your credit report. Now, I'm going to go over the foundation of credit scoring. The first slide you're noticing here is called Unlocking the Secrets of Credit Scoring. Keep in mind that these percentages vary for each credit report and each consumer, okay? The first one is 35% of the reasons for your credit scoring is positive payment history. The next one is staying below 50% of your credit limits.
See, now I had never, when you said that at Trade Secrets, I had never heard, I mean, I've got a credit card, and, you know, I'm older, I have pretty high limits in that, but, you know, at certain times I wanted to buy the HD TV, et cetera. So I didn't realize that the fact that I would go over 50% of my credit limit, although I must pay my credit card off, et cetera, or am pretty faithful, that would impact me.
Absolutely. It will impact you in a negative way. For example, staying below 50% of your credit limits actually calculates to 30% of your credit scoring system each and every month. So keep that in mind when you're buying a product and it's going over your limit. For example, if you have a Bank of America credit card with a limit of $2,000, you do not want to go over $5,000 from that limit. Obviously, if you go over that, even just a few dollars, you will actually affect your credit score in a negative manner, and it could potentially decrease your score anywhere as low as 5 points up to 20 points per month just by being over 50% of your credit limit. So keep that in mind when you are looking at your scores and reviewing your credit, that all of your credit cards stay below 50% of your credit limit. The next factor is having an account that is 6 months or older.
Wait, could I let me just go back to that. What if I go over the 50, but I pay it off that month?
Yes, that will not affect your score in a negative manner.
Oh, okay. So
as
pay it
long
off.
as you pay it off every month.
So I could hit the max, but if I paid it off,
Absolutely.
hitting it, okay.
It
So
will not
when I
affect
bought that HD TV and I paid it off,
that was good
Okay.
because it showed a positive payment, which is the
Oh.
first one, having a positive payment
did
history.
that move me up 100 points?
Don't we wish.
Yeah.
But it does affect your score in a positive manner, and it shows that you are responsible with your debts. And again, the next account is having an account of 6 months or older. And basically, this is called the length of credit history, which is 15% of your credit scoring. What this means is if you are a teenager about to go to college and you're interested in knowing how to establish your credit, you're going to want to make sure that if you open up a credit card or if you become an authorized user of your parents' credit card, that it will take up to 6 months for the accounts to actually reveal that you have a positive payment history. So keep that in mind, that the longer you have the accounts, the better it is for you, and it will reveal that it will reveal that you're making payments on time each and every month. So the longer you have it, the better it is. The next section is having a good mixture of credit, and this is the section of types of credit used, which is 10% of your credit score. A good mixture of credit is having an installment loan, which could be a personal loan or an automobile loan, a revolving account, which is a credit card or a home equity line of credit, and a mortgage. So keep that in mind. When you have credit, you want to make sure you have a good mixture. Again, our focus is that your credit score increases from this day forward. We don't encourage for you to acquire debt unless you can make those payments or you're using it in order for you to have the best possible programs when it comes to lending, your best options when it comes to increasing your wealth. That's the whole purpose of having a positive credit rating.
Yeah, let's reinforce that. The goal here isn't to get a lot of credit and do that by going to all kinds of sources. That is not what we're saying. Our goal is to get out of debt, period. Christians should, they should be a light and get out of debt, any debt that they have, as much as they can, as soon as they can. Doing that also increases credit score. So we're not saying, hey, have a big mix. It's just that recognize how credit agencies score, and when they see a valid mix that is healthy and looks like the person is in control, that could be positive.
Absolutely, and it helps you to increase your assets. So be aware of that. The next slide is payment history. So I'm going to go into deeper when it comes to the reasons why these affect your credit score. 35% of your FICO score is based in this category.
Okay, define FICO again. I always get mixed up on acronyms.
FICO means Fair Isaac and Corporation. Okay, in 1952, Fair Isaac Corporation established the whole credit scoring system.
Now, I'm guessing there was a Mr. Fair and there was a Mr. Isaac. Is that right?
Well,
No?
actually, there were a few, but no.
Okay.
No, but there were a few gentlemen that decided to open up a business called Fair Isaac Incorporation, and within this type of industry in the 1950s is when the whole process started. They discovered how to calculate credit scores by looking at your payment history, by having a good mixture of credit, etc. And with that being said, that's how the Bureau started their business. That's when Experian, Equifax, and TransUnion came to start their own organization. And they gather our information, they put it in the system. So they have everything, including our personal information and our account information. So the credit scoring moduling system has always been kept a secret from consumers. Keep that in mind. Not anyone in this world understands what they truly look at in order to calculate your scores. But what I am telling you today are secrets that I have learned within this industry in order to educate you today so that it's no longer a secret to you, but that you have a better understanding of how this works. So payment history, pay your bills on time. Everyone understands, of course. Delinquent payments and collections can have a major negative impact on your FICO score. The longer you pay your bills on time, the better your FICO score becomes. Be aware of your options prior to becoming delinquent on your active accounts. call your creditor and negotiate a payment plan. Let me explain a few things. First, prior to becoming delinquent, what you want to do is you want to contact your creditor, explain your financial stress, explain to them your hardship. Ask them if they have any payment plans available for you so that it does not become delinquent, okay?
So you see you've lost your job or something has happened. You go, I cannot pay the mortgage, I've got this car loan, whatever it is, and you're going, we've got to eat. I need grocery money, and we've got to pay our gas bill. I just can't pay it all. And so the tendency will be some people will just let it slide. Maybe it'll go away. I don't know what we're thinking, but you're saying be proactive. Do something up front because actually they will see, oh, wait a second, this is a person who wants to do the right thing, and that also protects them if they can work with the person. So you're just saying, if you are in a jam, act quickly, act early.
Absolutely.
Okay.
And let me explain that there are credit card companies, there are car insurance agencies, there are companies, mortgage lenders that provide insurance to protect you if you do lose your job. So what I would do if I were you is contact them, enroll in that insurance program so that if anything ever happens to you financially, you have a backup plan. Now, if for some reason it's only a temporary relief, feel free to contact your creditor, explain your situation, and they will provide a payment plan. They will either extend your due date or they will put you in a program, either a deferment where they will take that payment and put it to the end of your term of your loan, or a forbearance where they will stop payments completely for a short period of time, anywhere from 3 months, 6 months, or even up to a year, depending if that lender or creditor has that available for you. But do ask for options.
By doing that, will that negatively impact your credit score if they do that?
What's going to end up happening is it's going to show up on your credit report that you are enrolled in a program, if it's a deferment program or a forbearance, and it will reveal that it's basically freezing your account. So by doing that, you are saving your credit and your credit score.
Oh, that was worth the webinar right there,
Yes.
that information. Okay.
And the next slide is amounts owed. Basically, 30% of your FICO score is based on this category. Stay below 50% of your credit limit. High outstanding debt can lower your FICO score. Don't close unused credit cards as a short-term strategy to raise your FICO score. Don't open a number of new credit cards that you don't need just to increase your available credits only if this option is right for you.
Wait a second. You slow down.
Yes.
Don't close unused credit cards as a short-term strategy to raise your FICO score.
Yes.
Well, if I'm not using them, why shouldn't I close them? Why wouldn't that raise my credit score?
What happens is when you apply for a credit card, the representative will take an application and ask you if they can pull your credit report first. So keep this in mind. When you allow a credit card company or a lender pull your credit, that will decrease your score anywhere from 1 up to 5 points for each bureau that they're pulling your credit report with. Now, when you open up a new account, keep in mind that that is considered a new trade line, which is a new account. That will decrease your score anywhere from 5 points up to 20 points just for that new account. That's the same thing if you close your account. If you close your account, not only do you lose the payment history of that account, you are also closing the account and showing that you no longer need that debt, which is I understand you wouldn't need that debt, but you're losing all that history. That decreases your score anywhere from 5 points up to 20 points for closing the account.
Okay, the strategy would be we want to get rid of as many credit cards as we can. So
yes.
So there's a trade-off. Yes, it will lower your credit score for a while, but the trade-off is you're not you're not in bondage to the lender. So you have to weigh those. And we're just talking about how. Yeah, that's right. We're just talking about how this system works.
Yes.
You listening, you make the decision what is right. We just want to. We're not telling you what you must do. We want you to know how the system works so that you are not a slave to the system.
Yes.
But I learned some very interesting things here with this slide.
There are credit card companies out there that charge you an annual fee. So having an account that charges you an annual fee might not work for you. But just keep in mind that if you have, for example, let's say you have 5 credit cards, and you decide to pay all of your credit cards off, which is a great thing, and then close them off completely, you will decrease your score as high as 100 points for 5 accounts. 20 points each is the maximum. So imagine closing 5 accounts that you just paid off and deciding to close them. There goes a 100-point decrease right there.
You could lose a mortgage by closing your
credit cards.
Your credit cards.
Yeah.
But
the mortgage is another.
No, but I mean, they would be looking at the credit number, right?
Absolutely. So if you had a mortgage and you decide you want to refinance your mortgage, you might not qualify with a 100-point decrease. So be very careful which accounts you close. I would recommend not closing them. If you have credit cards that are not charging you an annual fee, don't close it. Just don't use it. Only have one active account when it comes to the revolving credit card. Only have one active. If you use that for gas purposes only and you pay it off each and every month, then perfect. You want to make sure that your accounts are active in order for your credit score to calculate each and every month. Not having any accounts that are active will actually decrease your score every month. So active accounts is what increases your score.
Okay, but if you had some extra ones that have just been sitting there, you might say, I'm going to close this account or that account. It doesn't decrease your score permanently. You'll just get a hit on your score.
Just temporarily.
Okay.
Absolutely.
How long does it take to build it back up then?
You know, this is the common question.
Deep secret.
Yeah. This is the common question. Let me be completely honest with you. For some, it could take anywhere from 30 days for you to see that increase. For others, it could take anywhere from 6 months. So I cannot tell you exactly how long it will take for you to increase that score again, but I can tell you that as long as you follow these steps, you will see a positive credit rating. And I recommend that you really evaluate what your credit is revealing before you decide to make any major decisions.
Yes, good. That's good advice.
Now the next slide is length of credit history. Approximately 15% of your FICO score is based in this category. A longer credit history will increase your score. Your FICO score considers the age of your oldest account, the age of your newest account, and an average of all of your accounts. I hope this is clear. I know it sounds confusing, but let me explain. When you pull your credit report if you pull your credit report online, which is considered a consumer report, or if you pull your credit report with a lender, you will notice that your payment history will be revealed for 24 months from the date of last payment. So your credit score is those factors that are calculating your score, it's looking to see how long have you had this account, how long have you made those payments on time, and it's factoring in with your credit score. Also, having a fresh account, opening up a new account, that's also factoring in. So be aware that 50% of the reason why your scores are affected either in a positive manner or in a negative manner is due to how long have you had the account and are you making payments on time. Again, so keep that in mind when you are factoring in your score. The next one is the length of time since your accounts have been established. Payment history establishes your credit. So keep in mind that if you have an account for more than 2 years and you've been making payments on time each and every month, your credit score will calculate that and realize that you are a responsible credit card holder or responsible consumer when regarding your credit or loans. So keep that in mind when you're looking at your credit score. How long has it been since you used a certain account? This is the same thing we were just
Right.
talking to with John. There are going to be times when you're not going to actively use your credit cards. Now, keep in mind that credit card companies have the right to close your account without your authorization. I'm sure there are many out there that have realized that with their own credit cards, that after 6 months of not using the account was closed by the creditor. Keep that in mind. So if you have a credit card that has a very low interest rate that does not charge you an annual fee, or if it does, it's an affordable fee, and you decide that you're only going to use it once a year, keep in mind that the credit card company can close that account. So if you use it once a month for gas purposes only, or grocery purposes, and you pay it off each and every month, that's your best bet. So that's my recommendation when you're establishing credit. All right, the next slide is new credit. This is 10% of your FICO score. Now basically, this has a lot to do with those that are interested in establishing credit. If you do not have a credit history at all, this is the best way to start. 10% of your FICO score is based in this category. Now, if you do have accounts and you're deciding to open up a new account, a new credit card, or apply for a new loan, just keep that in mind. Reestablishing new credit. Open an unsecured line of credit with your own cash at your local credit union or bank. There are also secured line of credits that I did not mention in the slide. I want you to be aware of one thing. When you are establishing new credit or reestablishing new credit, keep in mind that you do have the option to open up an unsecured line of credit.
Now, this doesn't make sense. Listen to this. I talked to Wanda last time. Well, why would you want an unsecured, what they call an unsecured line of credit? Every bank wants a secured line of credit so they know they're going to get their money back. But so you're saying an unsecured line of credit. That means it seems like it's totally at risk. So
right.
Tell me what this means.
They do, certain credit unions and banks do have restrictions when opening up an unsecured line of credit. For example, my local credit union's restriction is your credit score has to be a certain percentage. It has to be at least 640 or above to qualify for an unsecured line of credit. Now, if you are reestablishing your credit and your score is not at its point of 640, keep in mind that there is an account called secured line of credit. Unsecured means that it's not secured to any type of asset. So when you open up an unsecured line of credit, you're coming in with your own cash and you're opening up this account that's not secured with an asset of yours, either a home or an auto loan or even your personal checking or savings account. So keep that in mind.
But you did put the cash in the bank.
Now, opening up that unsecured line of credit is something that you would need to have your own cash for.
Right.
And basically, that's considered an unsecured line of credit. They do charge you interest with that amount that you decide to deposit with your bank or credit union. So keep that in mind.
So this is kind of a unique thing, and you might have to, I don't know, I'm still confused on it. However, you see it on the screen, and an unsecured line of credit, you're looking at how to open up new credit and build your credit score. Your credit union or a bank would understand opening an unsecured line of credit with your own cash. They're familiar with this terminology, although John D. Bonnick may not be.
Absolutely, and let me keep you all keep this in mind that if you don't understand anything when it comes to this process, we will reveal our phone number so that you can call us. So just keep that in mind, and we'll explain more how that works. But an unsecured line of credit is not attached to an asset. It's not attached to an automobile loan or a home mortgage. A secured line of credit is attached to an asset, and they have less restrictive rules when applying for a secured line of credit. So when you're talking to your local bank or credit union, ask them what their guidelines are in order for you to qualify for either an unsecured or secured line of credit. This is a great way to reestablish or establish credit. Having a positive payment for up to 6 months with that secured or unsecured line of credit will allow you to have a credit score in anywhere in between 640, and I'm talking about numbers now, but I'll explain that soon, anywhere between 640 and 680. Okay, this is considered an average credit score. So keep that in mind when you're establishing credit again. This is after you have made sure that all of your debts are paid on time, that you have no collections, you have no judgments, you have no tax liens, and you are reestablishing your credit. And this is also for those that are establishing credit for the first time. You also can pay this line of credit every month to reestablish your credit score. Note, it's okay to request and check your own credit report and your own FICO score with all 3 bureaus for free once per year. This type of pull is considered a soft pull, which will not decrease your score. Right in the beginning of this slide, I explained the website called www.annualcreditreport.com. This is a place where you can pull your credit report with each bureau as a soft pull credit pooling, and it will not affect your score whatsoever.
Say that again, www.
Annualcreditreport.com.
Okay.
All right, and the next slide is types of credit used. This is 10% of your FICO score. Having a good mixture of credit is ideal. Opening up a new credit line or closing an old account will decrease your score from 10 up to 20 points. Just as we also touched this subject earlier, so keep that in mind. Pay attention to the accounts that you have established and make sure that you have a good mixture of credit. Your FICO score also looks at the total number of accounts you have for different credit profiles. How many is too many will vary, depending on your overall credit picture. Now, if you and I were sitting here and you were reviewing your credit report, you're going to notice a section that's called Inquiries. The Inquiries section of your credit report reveals 24 months of your information showing who has pulled your credit report and with whom they have pulled it with. So, for example, let's talk about the Bank of America credit card. Let's say you opened this credit card in April of this year. You've made an on-time payment and the balance is below 50% of the limit. Your credit report will reveal that you had Bank of America pull your credit report with all 3 bureaus, and the inquiries section of your credit report will reveal when they did that and with whom they did that with. Now, that is considered a hard pull when you allow a credit card company or a lender pull your credit report. A hard pull will decrease your score anywhere from 1 point up to 5 points for each and every bureau that they pull that with. So keep that in mind, that your scores could decrease up to 5 points for a hard pull. A soft pull, which is you pulling your own credit report, will not decrease your score at all. But lenders and creditors have to pull your credit report with their system. So you providing a soft pull credit report will not allow you to get approved for that line of credit or loan. So keep that in mind.
This, I'm just going to take a little break here. This just, when you say system, ladies and gentlemen, that's what it is. It is a system, and it's not a God system. Now, why are credit reports created? Why are these scores created? Well, this is just John Bonnick thinking. These are banks and lenders protecting themselves, wanting to make as much money in the world as they can. And the more you get trapped in this system, the more you are a slave to that system. What we're hearing tonight is how the system works to help you take some steps to be better and perhaps to remove yourself from the negative of the system. So our goal is to be transparent with you, to help you recognize that you don't have to operate totally blindly in this system that would like to maximize their own profits. Ideally, they don't want any bad lenders. They don't want to have any bad credit because they want all good payers to make the maximum amount of money. So they've just developed this system that doesn't protect you, it protects them. The fact is, we're in a society, in a world where sometimes you need credit. Sometimes you have a home, you need a mortgage, whatever. It is not a sin to have a loan. It's in the same way that if you're cold and you have to borrow someone's coat because you're cold, that doesn't mean it's a sin because you've borrowed something from someone. Just recognize there are systems out there that want to maximize their profit. Now, that's not bad. A business can't exist unless it makes a profit. That's what the goal of any business is. So this isn't all necessarily evil or bad, but be aware that the system was built to protect itself, not you. So we are saying, let's learn how this works so you can protect you rather than just be the pawn of the system.
Absolutely. And, to talk about that subject of financial debt, personally, I know how it feels to walk around and not know your rights legally. And when you have an understanding of what your legal rights are, you have this sense of freedom in knowing that you can, fix this problem. So there are times when our finances decrease due to loss of job or a illness with our own family. Debts start to pile up, and it becomes extremely an extreme burden. Be aware that you have legal rights, and we are going to share those websites with you really soon here, explaining what your legal rights are.
That'll be good.
Okay. Yeah. Now, the next slide is credit score. The score can range from 300 up to 850. This is a FICO score that most lenders are looking at when they qualify you for either a home loan, insurance. So keep that in mind when you're applying for car insurance, home insurance, applying for a home mortgage. These are the scores that they're basing their decisions on.
If you're applying for it, would this apply to health insurance also, or not?
No.
No. Okay. But so for car insurance, if you had a lower credit score, would they charge you more for the car insurance?
Absolutely.
Okay. Those rascals. Okay.
Yes. So it really does depend on your interest rates that they're quoting you. The score is really a major factor. 300 to 639 is considered in the poor range. 640 to 679 is considered the average range. 680 through 699 is considered the good range. 700 to 850 is considered excellent. So keep that in mind. It starts from 300 and it maxes out to 850.
It seems funny to me, right in the middle from 639 to 699. I mean, you're talking about 60 points there that really move you from poor to good or getting beyond good. So when you're talking about how something could impact your credit score 20 points, that could jump you from good down to average.
Now you can see that.
Yeah, and that's where the issue is. Now, it won't always stay there because that's a temporary move down. If you keep your payment history going, well, it'll move back up. But just realize if you're going to be making a major investment or purchase and you need a loan, recognize where you are and what you don't want to do. Don't open more credit cards.
No.
Don't close. No, because now we're really talking a delicate range.
Absolutely.
Is what I'm hearing here.
And here's the situation. Just like I said earlier with an example of closing 5 credit cards and having your score decrease 100 points. Imagine having a 700 score and then it goes down to 600 for that one decision that you made that month. It's traumatic. On top of that, it can take up to 6 months or even up to a year to regain those points again. So you have to be extremely careful the decisions you make that will impact your score in a negative manner. So with that being said, keep in mind that this is an important number and that every decision you make will either increase your score or decrease your score. So keep this in mind when you're reviewing your credit report and figure out what increases your score so you'll never have to have a decrease again. And did you know that only 13% of the population have a credit score of 800 or above? So this is also alarming. So keep that in mind. Be aware of one thing. You will just keep this in mind when you're looking at your credit situation. It will not haunt you forever, I promise. You will be released from this financial burden as long as you do research and have an understanding of your legal rights. You will see this increase again with your score, and you will see your credit start to improve again. So please keep that positive outlook when you're reviewing your credit report and when you start fixing your credit.
You mentioned legal rights. Some of the good news here about what government is supposed to do to protect us in some ways. So you have some consumer credit laws and other things that are meant to protect us from predatory lenders. So there are some. So you do have some legal rights, which is another thing. We're going to get into that in a few minutes, but that is another thing to know. Okay, where are we next?
Now the next slide is your credit repair laws.
Oh, very well. That's where, boy, did I lead us into that. Okay.
What you can do is you can actually find your credit repair laws on this site, which is www.ftc.gov. Now that stands for the Federal Trade Commission. This is a great site. You're going to want to save this on your computer. This site does not only provide you educational material, but it also provides you, obviously, your laws there, and it allows you to report any complaints that you have with either your current creditor.
Yeah, turn them in. Yeah, get even with them.
Your collection agencies, anything that has to do with your identity theft. You can find all the educational material that you need on that site, the ftc.gov site. Plus, if you go into the search area of that site, you can actually put in the information that you need, which is the Fair Credit Reporting Act. That explains more about your rights when it comes to your credit report and what it's revealing. Your Federal Trade Commission on Credit Scoring Act. The Federal Trade Commission gives you an educational material that reveals how they calculate scores. The Fair and Accurate Credit Transaction Act. This is basically your rights in making sure that your credit card information is revealing accurate information. The Fair Credit Billing Act. This act reveals what credit card companies can and cannot do when it comes to their fees and the way they conduct their business. The Fair Debt Collection Practices Act. This act reveals your rights as a consumer when it comes to collection practices. So it will tell you what the do's and the don'ts of what collection agencies conduct on a daily basis. So if you believe that you are a victim of a collection agency, this will allow you to know what your legal rights are. Your Credit Card Accountability, Responsibility, and Disclosure Act of 2009. This is the new bill called the Credit Card Act. And this tells you also information regarding credit card rules and regulations. So these sites are very helpful when figuring out what your legal rights are in order for you to see a restoration in your credit and a restoration in your score.
Wanda, are these written in legalese or can?
Yes.
Yeah, I knew.
They are.
Welcome to the world of attorneys. So
yes.
They're in cahoots with them, huh?
So,
because I was thinking, like the Fair Debt Collection Practices Act. If someone is struggling and then they have someone just hounding them, and so they want to find out what their legal rights are to stop this person from standing outside their house trying to get all their money back or whatever. But
it's a large subject, and this is definitely something that in the future I can teach regarding this, but I will give you a brief idea of the answer to this question. If you have a collection agency that contacts you regarding a debt, you want to make sure that you either send a letter, and I recommend sending a letter, or contacting them by phone to validate this debt. And what I mean by that is if you send a letter to the collection agency, you're going to want to make sure that you put in writing that you are contacting them to find out if this debt belongs to you, and you are asking for them to reveal either the original contract that you signed with the original creditor or information regarding the original creditor for this debt. 9 times out of 10, you're not going to know why they're calling you. They'll tell you you owe a debt, but if you don't know who the creditor is, I don't recommend paying it. You've got to make sure that you get validated information first before you make a payment. There are times when you will receive a collection notice that is older than 7 years of age from the date of last activity. Be aware that you do have legal rights when it comes to this type of debt. They consider this an old debt. The Fair Credit Reporting Act explains legally your rights when it comes to this type of debt. If it's older than 7 years from the date of last activity or the date of last payment, they do not have the legal right to collect on that debt, and you do not have to pay for that debt. You can actually dispute that information with the bureaus and explain that this debt is older than 7 years old, and you can request for them to remove it from your credit report permanently. That's a lot of information, I understand that, but you will certainly learn a lot from the information I just provided. Now, this is a sample credit report that I would like to go into, and basically what I'm going to do is I'm just going to go briefly through this. This is what a lender would pull if you were going to, your local bank, Wells Fargo, Bank of America.
We just put a sample credit report on the screen, and Wanda's studying my computer so she can see exactly where we're going. So tell me where you want to go on this, Wanda.
Okay. So
I'll just start scrolling and then stop so I give people a headache.
Okay. So you'll notice that the section where it says applicant, if you want to scroll down.
Yes, okay, we'll do.
It's going to show your most recent information, and it's also going to show your previous information. So make sure that this section of your credit report, which is also considered your personal profile, will show your full name, your social security number, your current addresses, and it will show your previous 2 addresses. So keep that in mind when you are reviewing your credit report, that it is revealing the correct spelling of your name and the correct order of your address. So keep that in mind. Now, if you scroll down, you'll also notice a section of your report, of course, like I said before, which is your personal profile. If you keep scrolling, you will get to the credit summary. This section is important as well. This is a summary of all of your assets versus your debt. So, of course, we all know that a mortgage is an asset. It's going to reveal how much you have with all of your assets and how much you have with all of your debt. So this is an important summary that you want to keep in mind.
That sounds very important.
Yes. The next section is credit scoring. I want you all to be aware that when you apply for a home loan, the mortgage brokers are looking for a mid score in order to qualify you for that loan. So with this type of credit report, you're going to notice that the lowest score on here is your 620 score. And right here, TRU is abbreviated for TransUnion. Your highest score is 640. This is an abbreviation for Equifax. And your mid score is 635, and that's reporting with Experian. So keep that in mind if you apply for a home mortgage, that the mortgage broker is looking for your mid score in order to qualify you, and that would be 635. Contact your mortgage broker or bank and find out what the qualifying credit score is in order for you to apply for a home loan before you start the process. This right here, if you are a victim of identity theft, this will show if you have filed a fraud alert. Keep in mind that the Federal Trade Commission or the FTC.gov site will reveal information on how you can start that process if you are a victim of identity theft. So this will show who you've reported an alert with, which bureau it's reporting with, and which addresses or personal information you are reporting your information with. So keep that in mind. This is a section for that. The following is regulatory messages. It could be that you contacted your bureau and you wanted them to know specifically why you were disputing that account, for whatever reason, and you tell the Bureau, I want you to show that message on my credit report. For future lenders, future creditors, anything, for anyone to pull your credit, they can see what type of messages you've actually inserted in your credit profile. Public records usually reveal either bankruptcy, tax liens, judgments, and child support. So keep that in mind when you're looking at your public record information. And I put here a sample of a bankruptcy Chapter 13 that was filed August 27, 2001, and it was discharged September 22nd, 2001, just 1 month later in a few days, and it was dismissed. Okay, that means that basically the bankruptcy process was dismissed and all of your accounts were included in bankruptcy September of 2001. Okay, so this will reveal your public record information. This section is your credit history. I put 3 different accounts: a car repossession, a Bank of America credit card, and of course a collection account. Now, since we only have about 9 minutes, I cannot go into detail exactly what to look for, but please keep this in mind. When you're looking at this, what you want to make sure is that you realize that your account numbers will only reveal fully with your consumer report. But when a lender pulls your credit report, they will only have a partial number or sometimes no number at all. Okay, so keep that in mind. This will also explain to you what you're looking at with each category. The date that this account was opened is the first section here. So CFC Deficiency Recovery opened this account November of 2007, or the date of last reporting was November of 2007. It was opened August 2001, and the date of last payment or activity was April 2004. Now, you've got to remember, keep track and records of all of your accounts. This will show the limit, and this will show your balance and exactly the way this is categorized. Your past due amount, if you were past due, and of course your loan term, 60 months. This reveals 24 months of payment history right here. So all of this is really important. It also reveals here who it's reporting with. Experian and TransUnion is reporting this account.
So when those who, this gets just too complicated.
Yeah.
So when someone works with you, you actually pull a credit report and you start just, depending on the case, you just start digging through how to solve this, how
Absolutely.
to clear it.
Yeah, and I will teach each and every customer of mine how to basically read this report. It looks like Greek for some of us, but I will sit down with you and I will explain to you exactly what is revealing and how. So you will get that education that you need regarding your credit report. So with that being said, I'm going to end it here, and I want to be able to have this open for those that have questions. Please do not be afraid to ask questions at this time. It could be either for yourself, for your family member, friends. Feel free to ask the questions that you need to get some answers today.
Well, there was one a major question, or maybe a comment that I received, and they were just saying, why are you even teaching about credit reports? We shouldn't be messing around in this bad system. And I think you heard some of my answer to that, and I basically agree. The reality is that we have been in the system, and we at times need to borrow money. Almost every single business that has ever started, part of their business plan is to borrow money for a certain amount of time until they get to the break-even point where they can make money. So there is a lending system and a way of borrowing and lending. But the Bible talks more about don't stay in debt to someone. It is better just to love people. So one thing I want to do is pray for some of you who have been struggling with this. You don't know how to get out of debt. you've been concerned about it, but you haven't taken any action, or you didn't know what to do. We've presented this to give you some information to let you know there are some ways of getting out of debt. So I'm going to stop right now and just pray, and then we're going to talk about a couple other things, but I want to make sure we pray for some people here. Father, we know people are watching this tonight, some of them because they are desperate. Lord, you are the answer to every dilemma. And sometimes we've gotten ourselves in trouble. Sometimes our children have gotten us into trouble, or our parents or someone else has gotten us into trouble. We know there are many circumstances in life. And some people right now are struggling, and they feel that they are almost going under. Lord, we ask that you will now reveal to them that you are the way, the truth, and the life, and that the answers come from you. Lord, I ask that you will lead them to the right counsel, whether it's a pastor, whether it's a friend who will guide them, whether it's someone else. Lord, I pray that you'll also give them courage to face the foe and realize that they will win. So we ask now that you will help, protect, and be a defender. In Jesus' name, amen. Okay, we've got another question, and I want to review something else, and then we're going to conclude. Wanda, here's a question. Does having a fraud alert on your account negatively affect your credit score?
No. A fraud alert will protect your credit. So having an alert placed on your credit report will protect your credit and your credit score. So to answer that question, no, it does not affect your score or your report in a negative manner.
Okay, I want to just show something that we didn't see at the beginning of the webinar, and then I want to also go back to your information to see how you can help some people, because I know you have a special announcement for those who actually want complimentary consultation, which I think some people will desire. Just a reminder that the Business Destiny Weekend is June 25th and 26th here at Morningstar for those who are interested. And you can see the number. It's 1-877-446-3836. 1-877-446-3836. So call that number to register for the upcoming Business Destiny Weekend.
And since we're about to end here, I would like to share a secret with all of you, another secret that's going to help a lot of you. When you have a collection account that is placed on your credit report, be aware that you have options. Your first option is obviously to validate the debt first to make sure that it is an account that belongs to you. Now, once you validated the debt, either verbally or in writing, you can contact your collection agency and find out if there is a way that you can pay off this debt and get it legally removed. Be aware of it. It's called pay by delete process that you would have to request. Now, there are ways that you can get an account removed from your credit report once you pay off the collection account. If you have never received a verbal confirmation or in writing that this account belongs to you, if you never received a bill from that collection agency, nor have you received a phone call, and if you've never received that, you can contact that collection agency and confirm the address they have in the system regarding your account. If it's the wrong address, you can negotiate a settlement and get the account removed. But before you pay anything, get it in writing. That's just something I like to leave.
That's good. In other words, you have some weapons at your disposal, and you can negotiate. You know, you are not totally the victim. Know how to negotiate some things. Perhaps some things, even though you've made some mistakes, you can negotiate your way out of some of those things.
Absolutely, in order for you to reestablish your credit again. So keep that in mind. You have the legal right. Just find out what your rights are. And I also am available for any future engagements for your local church organizations or mortgage broker firms, real estate agencies, financial firms. I'm available for anyone that either works in that industry or would like for me to come to their local church and give a presentation. So please keep us in mind.
So you're in the Charlotte area, but if there's a conference or something that they'd want you as a seminar speaker or something,
Absolutely.
You could work out those details with them as well.
Yes.
Also, I put this on the screen intentionally. I actually added it to Wanda's slides because I wanted people to know how to contact her. I've talked with her before, and I said, well, how much does this cost if someone actually needs your services? And I heard her quote a rate. I went, wow, I don't know how she makes a living. My recommendation would be to raise it, but do that after some people talk to you. So what Wanda has agreed to do, if you have an issue, and if you want to have like a half hour of complimentary, just a no-charge analysis that she can give you advice, she can help you. You see the number on the screen, 704-877-8739. Call her. Now, if you need some further help, you and she could talk about what that would mean and how she could help you. And yes, would there be a cost for something? Believe me, the cost will be much less than what you are going through or what other consequences would be. She's a Kingdom Business Association member. Part of our code of ethics is operating in absolute integrity and treating anybody we work with utter respect, confidentiality, and just protecting you. So Wanda is an example of that. If you need some help, you can get like up to 30 minutes of a complimentary Q&A session or whatever, and then if you want to do something further with her, you can talk about what that would be. But that would be up to you, and no matter what, you're going to be winning in this. Okay, anything else, Wanda?
No, just keep in mind that we are available for the public. We do provide workshops as well. If you are interested in repairing your credit, we can go into deeper conversations regarding that, and I'm available for anyone out there that would like for me to come give a presentation. So I thank you so much for coming this evening and being a part of this, and I hope that this was enlightening to your future when it comes to your credit.
Okay. God bless you, KBA members, and those who aren't KBA members. That's an equal blessing to who's ever been watching, and I trust that this has helped you. Have a good night.